Good evening, guys. Ken at Tortoise Capital. This is the Monday Night Strategy Podcast for April 5th, 2021. Go Baylor. All right, let's start with our market health check, our daily, in the usual way. So today, the powerful follow through from Friday carried over into a large gap up, which was the low of the day in the S&P. It gapped up to the new Z2, and it powered through the fair value and closed very near yesterday's Z3 excursion to close at an all-time high at 406.36 and briefly hit 407. So we've got a new 10-day high, 30-day high, and all-time high made today. That's made the RL30 very steeply upward in slope. It's left the PSAR, which flipped 2 days ago, way back in the dust, just an inch or so below the Bollinger Band mean. You can see just how strong the move of the last 4 days was in how quickly the slope of the river has started to curl up. So what this means is that we've got to use something other than the Bollinger Band mean or the PSAR realistically as a stop for our swing trades. So just I'll cover that in a second. But so right now we've really cleared the previous RL10 and the hump of the dragon. We're now back above the fair value, long-term fair value, which is at 405. We've taken out all the previous Z3 excursions. So this really is new territory and genuine runaway upside move. So is there legs in that? Well, it's hard to sustain the S&P with that kind of asymptotic move. So I'm going to be very cautious and careful with protecting this kind of a move, because I think this is the abnormal gain that we have to contend with. And so to me, the legitimate contenders are the previous Z3, and I would just call that just the 1 bar low. Although I'm also contemplating pretty hard, keeping half of today's move from the intraday. Like I'm interested in keeping that, because if it rejected yesterday's close and came more than halfway back through the daily move, I would consider that as evidence that maybe today was just weekend buying pressure because of the long holiday and everybody wants to get in on it and so forth. So I could see 2 aggressive stops being there at 405 at the fair value, and then the 1 day low, and that protects you against the gap. Otherwise, the 2 bar low, you're really right at the peak of the dragon, and or you might consider the previous RL10 peak. And the psychological price level of 400, I could see, using that as a stop. Otherwise, you're back into the kind of the regular, the 2.5% sell-off is all the way back at 397. So you'd have to watch that thing go this far back over the next day or so and still be okay with giving that much back. I can't see that. In a world which it's now 15 years ago when Warren Buffett said, after the internet bubble burst, he said if you could earn 5 or 6% per year for the next 10 years, you'd be happy to lock that in. And so I don't want to give back 2.5% that was made in 1 day. You know what I mean? If we take 2 days, if we take a look at Friday or Thursday and then the gap and then today, I don't want to give that back. So for me, one of these top 2 support levels is the place where I would take off my discretionary trades. And then otherwise, I think you can make a strong argument for the upper skin of the dragon here at 397, or the belly of the dragon at 391, which is also the Bollinger Band mean. But I can't see you giving back like 5%. That would just sort of defeat the whole purpose of exit management. So I think you got to think carefully about your posture and your objectives and the open gains that you're holding, and how much of that gain is yours. Do you want to keep 3/4 of it? Do you want to keep 2/3? Do you want to keep half? And you might use a psychological stop in that sense to keep track. But for me, I think I'm going to be using the fair value at 405 because I know how to re-enter, and I don't have any belief that this thing is going to keep going up. I mean, I hope it does, but I don't require that in order to make decisions. So for me, 405 is going to be my line in the sand for my swing trades. I want to lock in that excess gain. And that essentially keeps 2/3 of the gains above the previous peak. So I sort of look at it like this, that the previous reasonable peak of price was the peak of the RL10, right? So I look at that. I look at this as the cap on the previous price level. And so now everything north of that line feels like excess gains that I was, it almost feels unprofessional in one sense, that I'm holding that much extra that I didn't have reason to believe that I could see that fast. So if I have my stop here at 405, I'm keeping probably I'm giving it 1/3 of the room to run and keeping 2/3 by declaring that mine. If I take the 1 bar low, I'm giving back half of the excess gains, giving back half of the gift horse. Under no circumstances would I let that come below 400, because now I feel like I am giving back professional money on the hope that this enthusiastic dumb money will take over. So I remember how difficult it was making this money in here. So I don't want to give any of that back. And I actually want to keep, this much of this gain right there. I want to keep that. Like the move out to Z3, the previous Z3, I'm keeping that. And that's why I have settled on 405, the fair value, as my swing exit. That's more psychological and attitudinal than anything else, but that's the way I'm looking at it. Statistically speaking, when we're this far out here pushing Z3 that far that fast, that's really quite remarkable. The last time we saw the Z3 lines moving that fast was way back here at the tail end of this move. And then when it rolled over, it was a pretty significant rollover. And this was a price from this peak that hadn't even pushed, it wasn't even pushing the Z3 boundaries, whereas this price is right up here at Z3. That's how exaggerated that is. Now, on the positive side, the futures were up in the aftermarket, but we got 12 hours before tomorrow's open. So let's see how that shakes out. The good news is that as we look at measures of ADX and the risk Z, we're still in early days of a strong swing. Now, most of the time when you think of a strong swing in the S&P, the slope of that is more of a grinding move like this. And so we're already at a price that if it had taken us 10 more days to get there, we'd have been perfectly happy because it was an orderly move. And our problem is that we got most of that move in the last 2 days. And so is that crazy price action? I don't know. But statistically speaking, it's an anomaly. And so I'm going to have my price stop in here at 405, halfway up the stack of today's price. And I will be happy with whatever happens tomorrow, no matter what. So I'm going to be ready for that. All right. Now, if tomorrow does sell off, let's suppose that price were to sell off and then it hit my stop and came down here and then started to roll back up. Well, I know how to re-enter. That looks like a Kata 2 kind of an entry. So I know as long as it finds support and begins to resume north of 400, then I'm going to treat that as just an ordinary pullback. But if it got below 400, then I think we're back into into this channeling zone inside here. This is, to me, the great big sideways moves were in this yellow zone. And so if it makes retracements up here in what I think of as the green zone, then I'm willing to get out and to get right back in, like on an hourly chart. But if it gets below 400 and into the yellow zone, then I think it will have rejected today's run up, and we're back into a channel that could very easily go back down to the Bollinger Band mean at 391. The good news is that when we get to the sectors, we're going to see that there was broad-based support across all of the sectors, or most of the sectors today. So there was quite widespread buying in the market. So that's actually pretty good. So let's go take a look at that now. In the sectors, let's see, we got find the S&P here. Where are you at? There's SP. So the S&P was up at 1.44. Diamonds were up 1.12. The Russell was lagging at 0.55. The completion index, which is that small cap, mid cap blend, was at 0.31. Treasuries were in the red at minus 0.44. I'm looking for emerging markets. Where are you at? There, and then emerging markets were down here in the small cap. So today was very much when the broad market is the leader. That's kind of unusual behavior. Oh, and there's the Qs, I should say. So 2% in the Qs, 1.5% in the S&P. So these were the large caps and lots of tech. So let's take a look at the tech sectors that won, or the market sectors that won, I should say. So we have lumber and Mexico were both better than the S&P. The FANGs were strong today, especially Facebook. S&P tech was better than the Qs at 2.07. Consumer discretionary 2.3. Brazil very strong at 2.8. Blockchain, Bitcoin, and then the large cap crypto at 4%, and then Ethereum at 7%. Tesla had blowout numbers on the delivery of cars. It blew away the estimates. And so they had a nice strong recovery today of 4.5%. Plus they benefited from the Bitcoin bounce. So good day for Tesla. Microsoft and Apple in conventional tech were very strong, 2.7 and 2.4. So lots of goodies there. In the green, but not as good as the market, Arc Genomics, which was better than the S&P biotech, so that's good. Let's see, what else do we have? Let's see, slightly underperforming the markets then were, in terms of sectors, Arc Genomics a little bit lagging at 1.4. Consumer staples and materials, lithium ETF, Japan, and then the S&P biotechs between 1.3 and 1.1. The moonshots, marijuana, wheat and precious metals, finance, between 1 and 0.8. ARC Innovation lagging at 0.65. Agriculture basically flat. Simon Property Group minus 0.13. Blended commodities minus 1.5. Materials minus 2.5. Clean energy minus 2.5. VIX and oil down 3.5. And then oil exploration 4.8. So combination of positive economic news and a lowering in oil prices led to depression in the energy sector, but conversely that was good for the business case for all the other sectors, which did pretty well. Our cluster of strong companies from the last 2 weeks, which were all of the materials, they were all down today. So like Devon Energy, our trader in the oil space, Alcoa, U.S. Steel, Cliff Natural Resources, which were so strong for us last week, traded well, but to the downside today. So it was everything except energy and materials was strong today. Led the way with tech. So I want to take a look at some typical trades from today. I just want to hit some highlights. This one is blockchain, and so I want you to notice. I want you to notice that its weakness was all underneath the VWAP, and then when it crossed the VWAP, and you can treat that as the minimum manageable risk box. That's essentially a COTA 2 entry. Because you have a higher low than the RLXD. And so if you're using the yellow box as your risk box, bang, you get an amazing move. You get a second COTA 2 entry here. You get a Z3 pinch exit here. You get another COTA 2 entry here. And then you get an orderly exit at the Bollinger Band mean or at the PSAR dot. Then I also want to highlight you get a supported spring crossing entry here, a COTA 2. You get another managerial exit. You get a Z3 pinch breakout. You get a COTA 2. You get another COTA 2. So lots of standard trade patterns today. Like this one this one should have scratched you, or fractional loss. This one pays off. This one pays off. So blockchain traded right in line with all our primary patterns today, and it's a good trader intraday and worth your attention. Even smoother was Microsoft. It gapped up and never looked back, and once it breaks out of its 5-minute trading box and crosses the VWAP, you are rewarded today with just venturing into that. Oops, sorry. That should be our yellow box here. So if you just take the low of the day as your execution risk, and you buy that retracement after 5 minutes, you're good to go. And then you decide where you want to pull it. Every one of these little pullbacks don't even get through the dragon and become the basis for additional entries if you want to play it that way. Here's a sniper exit. Here is the managerial exit. Here is the COTA 2 RLXD, and there's a Z3 pinch breakout, and then you get paid up here with the sniper exit or the managerial exit. So Microsoft, right from the get-go this morning, was one of the strongest symbols in the whole stack, one of the strongest symbols in the strongest sector by far. Apple gives you exactly the same pattern, and even easier to see the COTA 2 entries and the SSC entries, and certainly the minimum manageable risk box. And when it crosses the VWAP after horsing around, you get a tremendous move on that one, even if you're just playing one position. And then your standard exits, there's a sniper exit and another sniper exit. You didn't even get the managerial exit till here. And then the sniper is here and managers there. So it was hard to lose money in Apple today. Here is XLY. So just trading the broad sector spiders. The one I want to highlight is the supported spring crossing. That is just that's a classic entry right there with with your minimum manageable risk box right there to the PSAR. This little sell-off didn't even get through the dragon, and it resumes. So when spring goes to summer, you can buy a second position there, and then your sniper or your managerial exit is here. Your sniper exit is at the PSAR. Take your pick. And here is another supported spring crossing when the PSAR flips with a tight stop to the PSAR dot. So you're really only talking about 30 cents of open risk, and then your sniper exit gets you out here. So XLY offered a very smooth and orderly trade, and that's not even considering if you want the RLXD or the OWL entry on the south side. So you can actually have traded that in both directions with a typical trade looking like that on the short side, using our standard pattern. Oh, sorry, grabbed the wrong box. Yeah, so that one looks like this. Then your long side trades are looking like this. Or if you take the managerial exit, it looks like that. And then your final one looks like this on the upside. No reason to be short the strongest stocks in the strongest sector. So I don't blame you if you don't take that first one. Here's the technology sector itself. I mean, this one is just tailor-made for that 5-minute opening range, and it crosses the VWAP. So you just buy the minimum manageable risk box. You buy the COTA 2 entry when it continues without failing. If this one got you out, then that should get you back in. So I'm willing to take the sniper exit here at the red dot, as long as you then take the re-entry at the green dot. And you could even take another one here or anywhere up this stack that you decide. Like if it takes out the when it takes out the previous Z3 excursion, that's fine. And then there's your sniper exit, or there's your sniper exit, and there's your managerial exit. And even this COTA 2 here gives you another entry for later in the day. So XLK was maybe the smoothest trader all day. And that was just in the morning. In the afternoon, you get the sell-off. And now I really want to highlight, again, my favorite pattern, this COTA 2, which features, you're looking for the swing low in the RL10, a higher swing low, and then spring turns to summer. It crosses the dragon, and the PSAR flips, and so you get an entry right here with only 10 cents worth of open risk. I mean, that's crazy to think of that, but that's what that is. And then with an additional another RLXD and then a Z3 breakout, and you don't even get the managerial exit to here. If this one gets you out, I'm not upset if that gets you out, but then that one's got to get you back in when it recrosses. The spiders were strong all day. That's what the afternoon trade looked like. This one is Mexico, and this is a classic example of why we just love trading this one as a swing trade and intraday. Here's a COTA 2, a low, a higher low, and there is your supported spring crossing right there. Sorry, right there. There is a COTA 2 entry. There's another COTA 2 entry. There's another COTA 2 entry. This thing, all it did was want to go up today. And the beauty is that your initial risk, you're talking about 10 cents open risk, and at a reasonable exit, you're making, 80 or 90 cents off a 10-cent risk on the first position. So that one should have been double digits of a win for you in Mexico. That's why it's a frog champion for us, because it trades like that routinely intraday and as a swing trade. Here's XLP, the consumer staples, the most boring of them all, except for utilities. And even that one allows a minimum manageable risk box and a couple opportunities for the conservative entry. There's a COTA 2, and here's your sniper exit way up here. Or your managerial exit right there. So, and that pays off in a regular way. For those of you looking for short side trades, this works exactly in the other side too, and that is lithium gaps way up and then can't hold it, and then crosses through his dragon, and this one sets up the minimum manageable risk box entry to the downside. It allows you to cover and stop and reverse at the RLXD, and now you have a supported spring crossing. So this is what that looks like trading in both directions. This one should be a short, sorry. There's a short and then a cover and then a re-entry to the long side. And then if you're just using the PSAR, you end up getting out here for a nice trade on the upside, and nothing much happens after that. So lots of good trades on a very strong directional day. Today was a day you got to find the movers and ride them in the direction that the market and the sector want to go, and that leads you to Apple, Microsoft, Mexico, Tech, and Tesla pretty quickly. So finding the movers was the theme of the day. All right, so let's shift to the daily report. Yeah, Van makes a good point about emphasizing the importance of re-entry. If you trade this with the psychology that you've got 1,000 trades in front of you, and each one of these is simply the next trade out of a string of 1,000, then the next trade doesn't have to be the one that wins or loses everything. It's just the next thing that you do in a routine fashion. So you got to be trading at a level of risk that allows you to keep firing on the basis of your planning and preparation. You cannot have a mind that's changing all your risk parameters and your strategy and all that stuff intraday on the basis of a handful of trades. If that's happening, then that's evidence that you are trading at too large of a risk and you're making each trade too important to your overall psychology and well-being. So you got to be in there professionally, ready to trade 1,000 trades and keep firing with your chip stack. You got to ante up to see the cards, and if the cards aren't there, you fold them and you wait till you get good cards to play. And that kind of mentality will keep you in the game for the long run. It keeps you from getting too high when it's good and too low when it's bad. Let's see. Let's zoom to full page. Fit page. All right, let's shift to the daily report now. You can download that either from Patreon or it's in the handouts here in the usual way. So review, shapes, rectangle. All right. So let's go to the dashboard. You've already seen the daily report. So we are still in bullish normal conditions. We're overbought on every dimension. That's very good for the upside. The ADX has reversed from a low of 11, is now back to 12.5. It has to get above 15 to really signal a return to trending behavior, but it's pointing in that direction. The volatility is normal at 1.18. The risk Z and the risk index are both favoring the long side swing trade, so there's still room for this to have another good leg up, which could get it to 410 or 415, just on the basis of today's momentum. Obviously, there's not going to be any channeling and overreaction signals. Those are pullbacks in bull markets, and that was the opposite of what we had today. The big winners, the ones that are closest to their 10-day highs, that's the first place that I'd be looking for follow-throughs for tomorrow. Home Depot, Apple, McDonald's, Walgreens, Microsoft. The ones that are still lagging are S&P Biotech, the whole energy complex, and some of the finance guys like Goldman Sachs and then Morgan Stanley are both suffering in terms of lagging. Okay. In the Dow tactical summary, a surprising number of dojis today. You wouldn't have thought that with all of with the size of that gap, but there were some dojis today. Some big breakouts in the names you've already mentioned. Home Depot, Microsoft for the win. Walgreens had a good day at 3 3/4%. McDonald's had a good day, and then a smaller breakout in Salesforce and in Apple. So I like Apple and Microsoft, especially for tomorrow. Not surprisingly, nothing tests out on the auto framer because we are so near the 10-day highs. So not unusual. In the ETF tactical, just an abundance of symbols that broke out on multiple time frames today, led by all the big fat indexes like the Dow, the EAFE index, and Asia less Japan. Big moves in Europe, in U.S. real estate too. The S&P dominating with breakouts in every dimension, and XLB as well. So hard to go wrong with that. Exactly 0 symbols out of our stack test out on the auto framer at 2-1. That's just an indication of just how strong it was. I see, and Tom, all I see is the start of your note. Oh, okay. Yeah, Tom, you should. I didn't get a note from them that you had joined the list that I got on Friday. Didn't have your name on it, but I will, right after this, I will send you all of the information and get you squared away. It may have been late afternoon that you signed up after they had left, so they just haven't caught up with me. I'll get you squared away here shortly. So no signals from the auto framer. The daily squeezes actually had quite a few that test out well, because a lot of that move today was gap, and so the size of the intraday move was not large, even though the percentages were good. So there's still, that's why you can still see the S&P is still a daily squeeze breakout candidate, along with finance and healthcare, the small caps, mid caps, and emerging markets. So that just tells you there's more room for this thing to expand. And then I like the fact that Brazil is really ready to go also. Summer is now dominating in the 4 seasons. That's all good. So that's a sign of very broad market strength. We like that. And then the multi-time frame NDX tells you everything you need to know about just how broad the strength was today. When you see all that bright green, that's breakouts in all of those time frames. So like materials and real estate were a 5-bagger, Dow and the S&P. So really just everything was solid today, with the exception of energy, oil exploration, and oil. So as a contrarian, I'll be watching to see how far off those energy ETFs and symbols and oil retrace, because when they start to find support, you would think that would coincide with when the indexes themselves would start to slow down as energy prices go back up. So we're going to keep an eye on that as the contrarian signal. That's the canary in the coal mine, if you will. And that's basically everything I want to look at for today. I want to get this published and posted, and then I'll get you the background material here in a few minutes, and we'll get going with this. Okay, so that's everything I got. I'll get the recording processed and posted in the on Patreon in the usual spot. So thank you very much for your kind attention. I see a couple of guys from the